Good morning, everybody. It's the 6th of December. I am Joe Neighbour from Signal Centre, talking ball this morning. Sadly, no Steve today. He is not feeling too great, so it will just be me running through the latest on the charts and the latest headlines as well. Okay, so big news over the weekend comes in the form of what we've seen on the cryptocurrency markets. Bitcoin joined the rout in some of the riskiest assets amid the emergence of the Omicron variant. And also a hawkish pivot from the Federal Reserve. The digital currency has slumped over 20% since the beginning of last month, joining losses in other speculative corners of the market, such as the meme stocks, IPO companies, and some of the SPAC companies as well. Retail dip buyers whose willingness to stand firm amid all the news that's been going on with regards to markets has helped power the S&P 500 to a 21% gain so far this year, but they look like they're standing back as well. So Bitcoin currently trading around, let's have a quick look, 48,200, having gone down to a bit lower than that on an intraday basis, but we'll come onto the charts on that shortly. In terms of what's going on with the Omicron variant, the spread has reached vaccinated travellers across the hallway apparently in Hong Kong in a quarantine hotel, underscoring why the highly mutated coronavirus strain is unnerving the health authorities. Meanwhile, the scientists behind the Oxford and AstraZeneca COVID-19 vaccine will warn the UK should remain cautious until officials know the effects of the new variant, because it's so easy to pass on. Goldman Sachs have already cut their forecast for the US economy this year and next over the variant's effect on growth. So it has got obviously some big players in the industry starting to take notice and keep them on their toes. There was a bit of a tasty exchange between Ukraine and Russia and the US over the weekend at a dinner with dozens of their colleagues. The verbal tension erupted as the US and its European allies seek ways, including possible sanctions, to counter the threat of a Russian invasion of Ukraine after President Vladimir Putin's troops built up on the border of the country. We've also got some new concerns with regards to Evergrande. For those that were following the news a couple of months ago, this was the big real estate company in China, and fears have helped drive down equity prices in Asia overnight. Hang Seng leading the way with those losses. The property developer has warned that it may soon be unable to perform its financial obligations. That's thanks to a $310 billion mountain of debt. Elsewhere, there are also concerns with regards to tightening policy from the Federal Reserve and also growing COVID concerns, as we've already touched upon. So plenty happening in the markets today. In terms of equity markets, they look to be a little bit on the front foot today, maybe off of their best levels of the day, but all in all looking quite positive. But it seems probably the best place to start today is with regards to cryptocurrencies, because that's been the big news over the weekend and obviously well watched by many. So this is a Bitcoin daily chart, and as you can see from hitting these highs up here just shy of 69,000, we have seen a sell-off ever since, and that really picked up a bit of steam on Friday with a really large candle that that we saw. So it closed well off the worst levels of the session, but that will leave a bit of a mark, that's for sure. So that was a 21% candle in terms of the range of it, but in terms of the where it closed, it was obviously well off of those worst levels. But we are on the back foot again today. Bitcoin off by around about 3% so far, Ethereum off by around about 4%, and so is Ripple. So in terms of the technical outlook, there is some support down here at 39,600. That looks to be a reasonable level to target in the very short term. If we extend the chart out a little bit further to the left, then we can see that there are a number of key levels around about this kind of range, which is a 61.8% fib level at 28,742. And above that, we've got that key round number psychological support at 30,000. So down to these kind of zones, I think, it is possible that we could see moves into that kind of region, and just more range bound trading really, in the grand scheme of things. So looking for first level of support at 39,600 to potentially get tested, but certainly looks like the momentum is a little bit bearish on this at the moment, so do be careful if you are looking for opportunities to buy dips. I think we know there is a lot of underlying support for Bitcoin, so I think buying dips is probably the way to go. But there are some important levels there to keep an eye out for. If we look at Ethereum, the chart doesn't look anywhere near as bad as what we've just looked at on the Bitcoin. Not that it looks bad on the long-term perspective at all, but potentially a bit of rounding formation going on here. Potentially a bit of a double top. Maybe if we take this as the first top and this is the second. Then we'll be looking at maybe a neckline somewhere around that level there, which is at 3,960. We did have a little bit of a look below that level on Friday, but came roaring back to close above it. I think if we do get a close below this level on the daily chart, then maybe that would prompt a bit more selling in the short term. But all in all, probably just going to be corrective, I think, and allow some fresh value for dip buyers to get back on board. Going to move on now to the FX markets. Just going to start off with dollar index. So that continues to trade in bullish fashion. Was trading in this bullish channel. It did break out to the upside. We're back within that channel now. And over the last few days, the candles have actually been quite muted. Not really an awful lot going on, but underlying strength in the dollar index, and we are expecting higher prices up to the 61.8% fib level at 97.72. On the downside, we can't rule out a move down to 94.74, which is this blue line here and the lower end of this channel. So at the moment, really, it's kind of in the middle of both of those levels. So from a risk reward perspective, if you're looking to trade dollar on an outright position, then I don't think there's too many opportunities on there just at the moment. So you don't want to be trading in the middle of the ranges. You want to be trading at the lower or the upper end of these ranges to try and maximize the risk reward from the trade ideas that you're looking at. So looking at euro US dollar, that continues to trade lower. As we've talked about on numerous occasions, you've got this head and shoulders top pattern, which is looming large over the price action. That completed back here in August, and since then we've seen prices decline lower. Real sharp sell-off over the last few weeks or so, but over the last week, that's been a bit of a bounce. But it looks as though the sellers have stepped back in and we are moving lower. Ultimate price objective on the downside for us is at 110.58. Down there, I think we'll be looking to maybe review things and see what sort of price action we get. Whether or not we start to see some dip buyers emerge in that kind of region remains to be seen. If we take a look at cable, that has broken below the lower end of this wedge or channel that we had in place. Really quite sharp selling on Friday. Although we're seeing a bit of a bounce back today, we're up by 0.25% so far. We're just in front of this key 38.2% fib level. And why this is relevant is if we go back to these lows that we posted in March last year to these highs that we posted in June, the 38.2% fib level is kind of the natural retracement level where we'd expect prices to get to on any kind of meaningful correction. That for me doesn't invalidate the sort of overall bullish view, but in the short term, we have seen obviously the trend move within this channel, so it is bearish at the moment, but this 38.2% level could provide a bit of support for the beaten up bulls on this one. So we'll wait and see what sort of reaction we get in and around this zone over the coming sessions. If we take a look at euro sterling, that is lower today but continues to move off of the lows of the lower end of the channel and this big level of support between 83.80 to 84.00. Bit of red on the chart today, down by 0.25%. I would expect there to be sellers stepping in at the upper end of this, maybe. So maybe some more room for a bit more upside on that in the very short term. If we take a look at dollar yen, having sort of broken out of what I thought at the time was a bullish flag, we saw prices move to the upside, but then fell quite spectacularly on the increasing threat of Omicron and also the rhetoric that's coming out of the Federal Reserve as well. So for now, not really a lot going on. We are pulling back to this support level I've got on the chart of 112.22. So we'll see what happens there. Okay, moving on to commodities. Let's take a quick look at oil. That's on the front foot today, but as we know, it has been sold off quite sharply over the last few trading sessions. In fact, broken below this bullish channel with this really big impulsive move to the downside that we saw on the 26th of November. And since then, we haven't really seen any let up in the selling. Yes, we are on the front foot today by 3%, but it probably just looks like a bit of a bounce in the short term. Really key level here actually, from these lows that we posted on the 20th of August, we have fallen pretty much into that support zone at 61.70, and so far seen that do a reasonable job as support. So for me, this will be the key level that we need to watch. When we start to see these sort of straight lines of support and rounding sort of price action, then maybe what we could be in the process of doing is forming a bit of a head and shoulders top. So obviously highly speculative to call it at this point, but this is what we'd be looking for really, a rally into former right shoulder down to this neckline. If the neckline fails to hold, then we'd be looking for lower prices in oil. Really speculative call at this stage because it hasn't completed that, so we need to do an awful lot more before we do, but just something to potentially bear in mind. Just get rid of those annotations. A bit crude this morning, no pun intended. Crude drawings on crude oil. Okay, let's have a look at gold. Still a bit of a mess, really. We did break out of this channel, and I know Steve was of the opinion that what we did here was formed a bullish flag over the longer term chart picture, but we've failed to hold on to these gains, and we've seen the price slip back lower towards support at 1750 to 1745. I don't, again, feel that there's very many opportunities in this at the moment. We're not really getting any sort of constructive price action that would make you think, yes, this looks like a really good opportunity to trade. So be careful if you're looking at gold. I don't really have anything much to say about that at the moment, but that could change based on the price action that we get in the coming days. I think that will do on the commodity front, just looking at oil and gold. Let's now jump into indices. So starting off with our domestic market in the UK, which is the FTSE 100, that continues to trade in a nice upward trend, and this red line goes all the way back to those March lows actually. We've seen a nice touch point there in November last year, and again more recently November this year. So looking pretty good. We've got 3 touch points, which is a nice upward trend, and we look to be pushing higher from that, despite obviously coming off the back of a corrective move lower from the 74.05 level. So overall, it looks pretty good. We'll be helped today by the fact that oil is pushing higher. The UK market is heavily influenced by the likes of Royal Dutch Shell and BP, so that will be boosting things as well. We've also got the but the Bank of England will talk about raising interest rates this month. I think we've got a meeting on the 16th of December, so 10 days away. And the expectation is now that we will see rates rise in the UK. But obviously, due to the emergence of Omicron, we'll have to wait and see if that's altered the picture at all. But because rates are expected to rise, that is impacting things like banks, because if they have got higher interest rates, it means they can charge more on lending. So as a result, that will be helping the FTSE 100, which does have a lot of bank constituents as well. The largest one being HSBC Bank, which makes up quite a considerable weighting of the overall index. So for now, looks pretty bullish on the FTSE 100, and you'd be looking really for a retest of that high at 74.05, and providing it doesn't break below that low we posted on November and invalidate this uptrend, then you have to say that the overall picture remains quite bullish. Although price action may be rounding off a little bit over the medium term, so potentially in the process of forming more of a top, but very early to call that at this stage. Let's take a look at the DAX. So the DAX isn't performing as well as the FTSE 100. Again, price action really looking quite sort of flat and rounded. Maybe there is a top taking shape here. We've got key support of 14,809. If that breaks this key level here, then I think we'd be looking for lower prices down to potentially this 38.2% fib level at 13,100. That would be from the entire up move from those lows that we saw in March. Just tweak that slightly, so that level is actually 13,117. So a corrective move really into that level would be pretty natural, I think, and allow for some value creation in some of these major indices. That for me looks like a pretty decent level to think about wanting to own stocks again, and not being worried about the formation of a top here, as potentially is taking shape at the moment on the daily chart. Okay, let's take a look at some of the US markets. Still a picture of health. Yes, we have seen then retreat from the highs. This is the Nasdaq 100. So 16,768 was the recent high. We broke down through some support here at 15,904. On Friday, we posted quite a large engulfing candle, actually, engulfing all the previous day session and closing below this support at the same time. So that has the potential to trigger some more selling. We are on the front foot on the futures markets at the moment, but that could be capped by that 15,904 level. This is a decent uptrend line or an uptrend support line, so any pullbacks could be limited to this kind of region. So at the moment, today, that comes in around about 15,123, and as time goes on, that level will start to increase. So the support will get higher and higher. So overall, still looks pretty positive, but markets are worried about Omicron, and it remains to be seen how participants will react to this over the coming days. S&P 500 retreating off of those highs up here at 4,744. Overall, the trend still remains very positive. We do have a couple of support levels down here. How relevant they'll be, not entirely sure. I'd look at that one maybe as a decent level, which was that previous high from September. Seems to be holding in and around this at the moment at 4,550-ish. I think if we get a decent close below that, then that maybe could trigger a pullback to these red lines that we've got down here, starting at 4278 down to 4034. But overall, as you can see here, the trend is pretty spectacular, and therefore you would expect that any dip that were to be of any substantial measure would be bought up by the adoring fans of US markets. So one thing maybe to consider, and again, really speculative, really early stages, maybe what this is here is actually a left shoulder. Maybe we're forming a head here, and then maybe we'll be forming a right shoulder over there. But it's so speculative to call this at this moment in time. It's just something that we may want to consider, and that would be a massive top pattern that would take shape. But very early to call that, and just bear that in mind, I think, rather than taking that as gospel for now. Dow Jones, let's finish off with this. Again, looks to be just, simply eyeballing that. I haven't done much analysis on this recently because Steve generally covers it, but maybe something's going on here. Again, very early to call, but looks as though, price is rounding off a little bit. Maybe we could be forming some sort of top. Maybe it just means we're going to get a prolonged period of sideways price action. It's going to be difficult to trade. Overall, obviously, we are in retreat mode from these highs. The ranges are quite big at the minute, so volatility is obviously increasing. So it is going to be, I think, challenging conditions as we go into the final month of the year. Typically, December is a very good month for equity markets, and if you go back over the history of how December has performed as a standalone month, the results are generally pretty good. So let's see how things shape up in the coming sessions. We do have some big numbers due out this month. We've got Fed speakers. We've got on the 15th and the 16th, we've got central bank action from the US and the UK expected. So that could have a very significant say on how things go. And of course, we still are yet to find out probably enough information about Omicron to help with our predictive setups on markets. So that's it from me on the technical side of things. Just going to the gun to the head trades that we did last week. So this was the calls from Friday. I went short of DAX and made precisely 1R, 132 ticks, and Steve went short of gold, losing 12 ticks, which was also exactly 1R. So we basically cancelled each other out last week, and on Friday, making no return between us. So hopefully I can pick us a winner today. Going through all those markets a moment ago didn't really inspire me, if I'm totally honest, to look at anything much. So maybe what I'll do is have a look at something like Bitcoin, because it has dropped quite substantially in a very short space of time. And as we know, it is well watched by many, and typically they like to be buyers of dips. So just looking at that chart, it doesn't really fill me with much excitement at all. So let me have a quick flick through some hourly charts and see if anything grabs my attention. Nope. very much on the fly today. And if I had a gun to my head, I'd probably be dead by now because I haven't made the call. Let's go with... Right, let's go with these New Zealand dollar currencies. So New Zealand dollar currencies have sold off quite sharply because they are associated with risk, and when people avoid risk, New Zealand currencies tend to get a bit of hammering. Same with the Aussies. So we can clearly see from the hourly chart here, we're in a downtrend. We've broken down through this support here at 76.66. Over the last few hours, we've had an attempt at rallying to try and retest this support. So ideally, I'd want to be setting my levels bang on that support resistance, to get short, but as I'm short of time, I'm going to have to go with it now. It's at 76.44. Going to place a stop loss just there, 30 ticks above at 76.75. And I'm going to target a move down to 75.50, looking for new lows on that. And that is a 3-to-1 shot today on New Zealand dollar, Japanese yen. So that's my gun to the head trade. Okay, data-wise today, in 5 minutes, we've got the UK construction PMI number. The index is expected to fall to 54.2, and that is the only high impact data point we have today. So be wary of that, which is now 4 minutes time. And that is pretty much that from me today. Hopefully Steve will be feeling better tomorrow and we can do a more comprehensive roundup. But until then, everybody trade safe and have a great trading day. Goodbye.